Hi everyone, welcome back to Nairobi Legal Insights. In the previous video, we discussed about the accounting theory, and in this video, we're going to be looking at the structure in which the mathematics that informs, or rather the mathematics that is informed by the theory in the previous video can be utilized to answer questions. So I'm going to be laying out the framework of how you should structure your income statement as far as accounting for lawyers is concerned. When we talk about this income statement, this is a statement of profit or loss. And so the objective here is that how do we get the net profit of a business at the end of that specific financial year. So as you can see from your screen, this is how you lay out different components of the income statement. And I'm going to be reviewing each of these statements that I've written on the screen so that you get to understand how do we get net sales, how do we arrive at gross profit. And as you can see already, for us to arrive at gross profit, we'll be getting net sales less cost of goods, subtracting the cost of goods, and then we arrive at the gross profit. And then after the gross profit, I'm going to be guiding you on how we can now reach the net profit, which is the profit that has actually been gained by the business within that specific financial period. So, from the baseline, before we arrive at net sales, I want us to know how we actually arrive at these net sales. So, assuming we have a business and this business is a bookshop, this bookshop sells accounting for lawyers textbooks. So if the bookshop had sales within a specific period of time, and maybe the sales were amounting to XX amount, for us to reach the net sales within that period, maybe some of the textbooks that were sold to the customers were returned to the bookshop. And so we get sales generally, and we less sales returns or return inwards, anything that was returned to us. Because remember that the books that were returned to us after we had sold them, when they are returned to us, then we cannot say those were sales. That is something that has been returned. And so for us to know how many books that were sold within this specific period of time, then we are going to get sales, and we less sales returns. And the other term to mean sales returns is return inwards. So when we subtract sales returns from sales, then we get our net sales. So pay close attention to what I just explained so that you know how we actually arrive at net sales. After computing the net sales, remember we are going to be getting these net sales and subtracting the cost of goods sold so that we arrive at our gross profit. And so we have these net sales, but thinking as a business person, remember that we talked about the aspect that even as you're making these sales, there was money that was incurred to buy these textbooks. And we are using an example of a bookshop and textbooks, and the textbooks are accounting for lawyers' textbooks. So you've made these net sales, and this is the number, but how much was incurred? What was the cost of goods sold? What was the cost of those textbooks sold? So I want us now to break down the components that fall under cost of goods. Under cost of goods, when we open our bookshop in January, after December holidays, there was an opening stock of this XX amount. And because these books were already there, maybe we wanted to purchase more because the students were many. There was demand. So on the opening stock, we add purchases. So you see, we have opening stock, add purchases. Maybe out of the purchases we actually bought, out of the books we added to the opening stock, some of them were returned to our supplier. So then we need to have these subtracted from the purchases we had gotten. So we are going to less purchases returns. Whatever you returned after purchasing, you less it so that you get the actual figure of the purchases that you actually remained with as far as the beginning of the year was concerned. Now, for us to get the actual amount of cost of goods within that specific period, we are going to be lessing the closing stock as we close off the financial year. So we're going to be, basically to give you a recap, we have the opening stock, we've added purchases, we've subtracted any purchases, any textbooks that we might have gotten from a supplier and returned to the supplier. And after subtracting that, for us to know the actual cost of goods within that specific financial year, then we are going to be lessing the closing stock. And when we less the closing stock, then we're going to arrive at the cost of goods sold within that specific period of time. Just to recap this, we have the opening stock, we've added some purchases, and then some of the purchases were returned, so that's what we call purchases returns. And then for us to get the actual cost of goods within this specific period of time, we have to less the closing stock. After, basically we are getting the opening stock and adding the purchases, and if anything was returned, we subtract that. So we get the opening stock minus the closing stock to get the actual difference of the cost of goods within that period of time. Basically, what was the cost of goods that was incurred as far as this specific period of time, maybe from January to December, was concerned. So when you subtract, you're able to get the actual cost of goods. We are lessing the closing stock because we have not, basically, we want to know what has remained within our bookshop as far as this financial year is concerned, and now consider the cost of goods that we have sold within this specific period of time. Simply put, these are the components of cost of goods sold. We'll have the opening stock, and sometimes the opening stock may not be there, and you're going to be beginning with purchases from the onset. So with that explanation, for us to arrive at gross profit of a business, then we're going to be getting these net sales here. Remember, we got net sales. We're going to be subtracting the mathematics of all these figures. We put it here, and then we get this figure and subtract this figure for us to arrive at the gross profit. So just to recap that, we have gotten our net sales. We explained how we arrive at net sales. And we say that we've made these sales, yes, but there was money that was incurred to acquire those goods that we sold. And that's why we are lessing cost of goods sold. And under cost of goods, we have the outline that these are the different components of cost of goods. And then once we get the total, as I explained previously, we bring our total here, and in accounting, as brackets will mean subtraction. So then we are going to get these net sales minus this cost of goods. And after that, we are going to arrive at our gross profit. So this is the gross profit of the business. So I hope I hope we are clear up to this point in time. But in case you have any question, please share your comment, and also you can reach out so that I explain this further. Share your comments and I'll respond to them. But up to now, we've understood, so far so good, how the income statement starts and how we arrive at the gross profit of the business. Having understood how we arrive at gross profit, now the next step is to look at the question and see if there was any other income received within this specific period of time. And so on the gross profit that we computed, we add any other income, if any. Remember, it's not a must that other income will be there, but I'm just laying out the structure and the framework of how an income statement looks like. So some of the components that include income would be discount received. So if we went to the bookshop and bought 100 textbooks, or rather if we went to our distributor as the bookshop, this is the example I've been using. So we are the bookshop, we go purchase the books from the suppliers, and we're given 100 accounting for lawyers textbooks, and we receive a discount of 10,000 on the cost of those textbooks. That is considered as income to us, because at the end of the day, we were meant to pay the full price. But because we received this income, then we are going to consider it as an income. So a discount received is an income to the business. If you want to further understand what are the components and examples of incomes, please go back and watch the first video all those components we talked about under the theory fall under here. So you will be adding them here as any other income. And once you have this, then you will have the total amount of basically gross profit plus any other income. And when you have that figure, then you're going to subtract expenses so that you arrive at the net profit. So just to recap, we have our gross profit. We've added any other income. And if you want to understand what is the definition of an income, what are the components of income, please watch our first video on accounting for lawyers. Now, by just focusing on this specific presentation and what you can see right now, we are getting the gross profit, adding any other income, and the next thing is to less expenses. Some of the expenses will include bad debts, a discount allowed. If students came to buy textbooks from the bookshop and you gave them a discount, you allowed that discount, that is considered as an expense to the bookshop because you've sold the textbook less than the price you're supposed to sell it by giving the customer a discount. And so that difference is an expense to you. You've basically forgone that specific amount of money to sell a textbook at a discount, and so it will be an expense as far as the statement, as far as the income statement is concerned. Then, of course, salaries, rent, distribution expenses. Maybe these textbooks are distributed using motorbikes, and then maybe there's an insurance expense. Maybe you're paying rates in terms of land rates, assuming that we own the piece of land where the bookshop is constructed, and so we end up paying rates as far as the law is concerned. And this is, of course, in line with conveyancing, and we shall be looking at that in other sort of videos under different areas of the law. So if you want again to understand what are the components of expenses, please watch the first video on accounting for lawyers. But basically, expenses are costs incurred in generating an income. In the first video, we defined everything very well, and that's why understanding the theory informs how you come up with a proper framework or structure of an income statement. And when you have the structure and knowing which component to put where, then the mathematics becomes very easy. So in a nutshell, we've gotten our gross profit, we've added any other income, and then we've subtracted expenses so that we arrive at the net profit. For this video again to make a lot of sense to you, please watch the first video, because by computing and providing with you, or rather by providing this framework, I'm getting the theory and now breaking down the components to show you where the mathematics will be put as far as the next presentation is concerned. So we are able now to know how we can arrive at net profit. But some of the key points you need to note are that every time you're basically laying out your income statement, remember to give it a title. A title itself is a reward. So maybe you could write a title from the question, and you're stating that this is Dixon's income statement for period ended 31st December 2021. So a title is very key. You have a title, and then you start to lay out the framework I just shared of how an income statement looks, feeding in the different components, and for you to understand the components to put where and at what point, then you must first appreciate the theory, and that's why I keep on saying, please watch the first video for the second video to make sense. And then you should have a good layout of the income statement, because also this amounts to a benefit in terms of scores. When you're very organized so that someone can see where you're coming from, you've put the brackets, you've underlined, you've basically laid out a proper structure to show that you know exactly what you're doing. So in today's video, we laid out the foundation of an income statement, and in the next video now, we can start to do the mathematics so that you see how we are going to be identifying certain figures and components and either putting them under expenses, putting them under cost of goods, and so many other things that we're going to be looking at in the mathematics. And obviously for active engagement, you can follow our social media so that every single time we post a new video then you're able to receive a notification, and then you follow through, as we are going to be looking at accounting for lawyers. And then you can also look at the link I just attached in the description. If it works for you, then feel free to actually join that specific group. Thank you so much for watching, and see you in the next video, when I'm going to be now computing a question that I will display and work through it, so that by the end you can then be in a position to do your own income statement and compute it, having understood the different components. Thank you so much for watching, and see you next time.